So, Ethereum just dropped its most ambitious plan since the merge. It's a huge, multi-year vision to completely overhaul the network. We're going to break down what's in this new roadmap and, more importantly, what it could all mean for the future of ETH.
Look, this isn't just some technical document for developers. Not at all. It's a massive signal to the market about where Ethereum sees itself in the long run. And that gets us to the big question for this explainer. How does this grand vision actually connect to the bottom line for you, the investor, the ETH holder? All right, here's how we're going to tackle this. First, we'll talk about just how big of a deal this is. Then, we'll decode what this whole Strawmap thing actually is. After that, we'll jump into its 5 huge goals, the timeline for making it happen, and finally, we'll bring it all home to what really matters, the potential payoffs and the very real risks for investors.
And let's be super clear here. This is a really big deal. We're talking about what's probably the most detailed, comprehensive plan for upgrading Ethereum space layer since the historic merge. You can think of it as a major strategic bet on the network's future dominance.
This all kicked off back on February 25th. That's when some researchers at the Ethereum Foundation put out a document that, really for the first time, gives us a concrete vision for the protocol that stretches all the way out to 2029. So what is this thing anyway? It's called the Strawmap, and honestly, the name itself gives us a huge clue about how we should be thinking about it, especially from an investment perspective.
The name is literally a mashup of strawman and roadmap. And that's, well, it's pretty telling. It shows they're not coming out and saying this is a set-in-stone promise. They're basically saying, hey, this is a conversation starter, a proposal to get all the developers on the same page. For an investor, the key takeaway is right there. Treat this as a guiding vision, a strong signal of intent, but absolutely not a guarantee.
Okay, so at the core of this vision are 5 massive goals. The developers are calling them their North Stars. And these aren't just random upgrades, you know? They are direct answers to some of the biggest, longest-running complaints people have had about Ethereum.
So to put it simply, the plan is to make the main network way faster and way bigger. Then they want to make its ecosystem of layer 2s just unbelievably huge. And on top of all that, they're aiming to make the whole thing secure against future threats. We're talking quantum computers. And finally, to build privacy right into the heart of the protocol.
Let's start with speed, because this is a big one. Right now, when you do a transaction on Ethereum, it takes about 16 minutes to be considered totally final, totally irreversible. The goal here, to slash that all the way down to just 8 seconds. I mean, that alone shows you the scale of the ambition here. It would be a game changer for user experience.
Next up, capacity. This is the GIGA's goal, and it's all about pushing the main Ethereum network to handle somewhere around 10,000 transactions per second. This is a direct shot at the high gas fee problem we all know and hate, right? More capacity means less traffic jams, which should mean lower costs for all of us.
But wait, the Layer 1 goal? That's just the start. The vision for Layer 2s, the networks built on top of Ethereum, is even crazier. The DERA goal is targeting a combined capacity of up to 10 million transactions per second. The whole idea is for Layer 2s to handle almost all the action, while the main Ethereum chain acts like this super secure judge, the final settlement layer for this huge digital economy.
The fourth goal is all about long-term survival. The roadmap wants to bring in post-quantum cryptography. Now, that's just a fancy way of saying they want to make Ethereum's security totally future-proof. It's a defense against the potential threat of quantum computers that could, one day, break the encryption we use today. For any long-term investor, this is a really critical detail.
And last but not least, privacy. Instead of making you rely on other apps, this plan is about building privacy directly into Ethereum's DNA. This would mean you could do shielded ETH transfers right on the base layer, making privacy a native feature. That is a huge deal for a lot of users and businesses.
So those are the 5 big, ambitious goals. But, a vision is great, but how are they actually going to do all this? Well, let's look at the execution plan, which brings us to their proposed timeline. The plan lays out a surprisingly aggressive timeline. We're talking about 7 major upgrades, or hard forks. Think of them as network-wide software updates. The idea is to ship a new one about every 6 months, all the way through 2029. The first 2 even have names already, Glamsterdam and Higoda. This steady rhythm is meant to make progress feel consistent and hopefully manageable.
Okay, so we have this grand vision, and we have a real plan to get there. Now for the most important part. What does this all mean for the value and the risk of holding Ethereum?
Well, The market's first reaction was this little flash of excitement. On the day the Strawmap came out, ETH jumped over 13%, going from around $1,850 to over $2,100. But that rally didn't last long. It suggests traders thought the long-term story was interesting, but they're still way more focused on what's happening right now. Now, the bull case, the optimistic take, is summed up perfectly by this analyst quote. For anyone in it for the long haul, the Strawmap gives you a clear story. It's a plausible narrative for how Ethereum solves its biggest problems and really cements its place as the dominant, future-proof settlement layer.
But, and this is a big but, the risks are huge. First, you've got execution risk. Can the developers really hit a major upgrade every 6 months? That's tough, and delays could really hurt confidence. Second, governance risk. Some of these changes are pretty intense and could cause big arguments in the community. Third, market skepticism. Like we saw, the market is focused on today, not 2029. And finally, maybe the biggest question of all, L2 value capture. As everything moves to cheaper layer 2s, will enough value and fees actually flow back to the main Ethereum chain to keep the price of ETH high? Nobody knows for sure.
And all of this brings us to the final question, which really boils down to one simple thing. Is this a credible roadmap, or is it just an impossible dream?
Look, at the end of the day, Ethereum is betting its entire future on pulling this off. If they do it, if they actually succeed, then a path to something like a $10,000 ETH becomes way more believable, because the network would be fundamentally better and safer. So the real question for any investor is this: do you believe this is that path? Or is this just an ambition that's too big, too complex to ever actually deliver?